Hello, everybody. Long time no see. A different angle here, it looks like. Good to see all 13 of you. This is an exciting YouTube because this is the last YouTube that I'm going to be using with my old MacBook Air. I got a new MacBook Pro that's actually coming today. That should alleviate some of the skipping and the terrible production value of previous YouTubes. So we'll see what happens with the next YouTube, if it works any better as far as not skipping, etc. I went from 13 people to 5 people in 30 seconds. Oh, back up to 9 people. Who knows how this works? Seems odd. But anyway, hope everyone's doing well. It's been a few weeks. I'm in a pretty pissy mood because of the usual reasons. My 2 biggest positions only go down, and they are doing that today. But let's talk first. Well, first, I'll take a victory lap on CCXI. For the few people that watched the last YouTube all the way to the end, I pitched CCXI and said it was going to get approved based on the major amendment and some other factors. And I was correct. And I made a decent amount of money there. I'm all out of it. As you could see, it did not go to the price target that I was hoping it would go to. So I had to unwind the November 35.45 call spreads for a few bucks when I paid 60 cents for them. And I made a lot on the October 2030s and the 2530s. So that was a win. I have another biotech pitch today that is similar, but not the same as CCXI. It's AXSM, and I have a 200 basis point position in call spreads there. The pitch there is, again, similar, but definitely not the same. So they have a drug under review, and it has breakthrough designation and had priority review, which CCXI did not have. And they had a PDUFA date in the third week of August. And on August 6th at earnings, or August 7th, they announced that they had a deficiency letter from the FDA that precluded them from being able to enter into labeling discussions, and the stock plummeted. And you got to the PDUFA date on the third week of August, and the FDA said they were not going to render a decision by the PDUFA date. And 2.5 months later, we're sitting here and there is no decision. So what does all this mean? In the past, when a company has gotten one of these deficiency letters, 100% of the time, they get a CRL. And the CRL happens at or very, very close to the PDUFA date. I think only in the case of Acadia, ACAD, did the CRL come 2 days after the PDUFA date, 2 or 3 days after the PDUFA date. This has happened probably 4 or 5 times in the last year, these deficiency letters. The company told us on the conference call on August 6th or August 7th that as soon as they knew what the deficiencies were, they would let us know, the market. We're now 2.5 months later, like I said, and there has been no information. Guggenheim put out a report last week that said the company is still preparing for launch, and when they have a material update on the review, they will let the market know. And I don't know whether it's Guggenheim or it's the company. They hope to have an update at earnings. Again, I don't know which one. It was not clear based on the note who was thinking that, whether it was Guggenheim or the company. Stock should go certainly north of 60. I would think it would go as high as 70 or 80 or $90 a share. You could see where it was trading before the deficiency letter. There was already some skepticism that the drug would be approved. At that point, I'm told, the options market is pricing in a gigantic move to as high as 100. So the way that I'm playing this, I put these on when it was lower, is I am long January 50-60 spreads and some January 50-70 spreads, but mostly 50-60. And my thought here is that if the FDA wanted to CRL this, they would have CRL'd this a long time ago. There's no reason why it would take them over 2 months from the PDUFA date to let the company know what the deficiency is or deficiencies are and how they need to be rectified. It's very, very rare for the FDA to miss a PDUFA date without giving a major amendment. It's happened just a few times outside of COVID. With COVID, it's happened because of inspection issues like lysocell, but it hasn't happened outside of inspection issues. You can go back to like Sarepta with eteplirsen, where it was controversial and they missed the PDUFA date and they ended up approving eteplirsen. But this is not that kind of situation. So that's my AXSM pitch. Who knows what happens there? When I put down those spreads, I was getting 7-1. And I think now you're getting like 4-1, something like that. So I still like them. And I have 200 basis point position. I would hope we get a decision there in the next couple months. Let's talk MagnaChip, since yesterday there was news on MagnaChip. MagnaChip released earnings, and the earnings were good. Right? You know, the top line beat the two loan analysts by $7 million, and you know, you don't usually care too much what the analysts expect, but in this situation, it's a complete black box what earnings are going to be every quarter, given the supply issues in the semiconductor industry. So they beat the top line by 7 million, but they destroyed it on EBITDA and on adjusted net income. They doubled the estimate, and they came in at 42 cents for the quarter. This is a seasonally high quarter, this in the fourth quarter, and this is a big but, if the company can continue to have gross margin like this over the next few quarters while supply comes back, then you're looking at a run rate earnings power of north of $1.25, which is what I always thought this would do. And that's before the supply comes back on the display side. And then when that comes back, of course, gross margin will come down, but you should see revenue explode. And again, back to the earnings power, which I always thought in this business was north of $1.50 next year. And I still think that's the case now. The stock is $18.60, and there should be something like $8 a share in net cash after the breakup fee. So you're looking at a $10.50 stock that should do north of $1.50 in earnings next year, $1.25 run rate now, growing pretty rapidly over the next few years. And that's if there's no deal. You know, if there's a deal, you get 29 bucks if Wise Road closes. I do not think Wise Road will close. Obviously, the market does not think Wise Road will close. It's an $18 stock with, like I said, $8 in net cash for a breakup. And it's a $29 cash deal. So I don't think in my whole career I've ever seen a spread this wide, especially if you adjust for cash and then you have a deal close. But stranger things have happened. I have no idea why Wise Road wanted to extend in September. I talked about this before. If Wise Road was thinking this business has deteriorated as rapidly as some people think it has, and if they're worried about Samsung pulling their business, you'd think Wise Road would just pay the breakup fee and go home. But instead, they extended and they pulled and refiled with CFIUS. So what happens next? You know, I think we'll wake up to news one day, like I said. You know, the CFIUS thing should end by the end of December, but they could pull and refile. I think I read somewhere that it's very unlikely they would pull and refile again. That, you know, that doesn't usually happen. But the last extension date is the third week in March. Can't go past that. I don't think it'll go past the end of December. But if it has to go to the third week of March, it goes to the third week of March. It's not a big deal, right? The company keeps growing, keeps generating cash. They'll get the breakup fee. And I believe strongly there'll be an alternative deal. I don't know what that alternative deal would look like, but I would think you can get, like I've said many times on here, a Korean private equity firm, maybe partner with a US private equity firm to buy the company. And I would think China wouldn't have a problem with that, since this is such a small company, as long as it's Korean that led. And if they don't, then the company will do some form of dividend recap, and you'll have a growing semiconductor company that's trading at, you know, half to a third the valuation of every other semiconductor company that has that kind of growth profile, which you don't see now, of course, because of the supply problems. So yeah, I'm huge in MagnaChip. I bought a lot more yesterday above this price, and I bought more last week. It's like a 45% position, I think, for me now. And it's all common. And I think the quarter really de-risked the story. because last quarter was when they kind of shocked the market with the really weak top line and bottom line. And this quarter, the margins were so good that you see the profitability and you don't have to worry about another quarter until February. So they're not going to warn between now and February. They don't even guide. So I would say there's probably a 50% chance you have a resolution with either a new buyer or with Wise Road buying them before you even see the next print, which is next February. And if you get to February and you haven't seen the next print, you're within weeks of the deal breaking in the third week of March, and you'll get your dividend recap, and the stock's just going to be higher. I just really believe it. So I'm very bullish on MagnaChip, and I don't really care what it does on a day-to-day basis. I'm shocked it's still below $20 right now, but there's no natural owner for this thing. The ARBs are mostly all out. As you can see, it's an 1850 stock, and a $29 deal. There's no long only in this. There's no index in it. Indexes in this. So all you're left with is, the mom and pop hedge fund that wants to buy a liquid Korean semiconductor company. And, they're not there. So unfortunately with Groupon, which I still have the same position I had on last time I spoke, I'm way less enthusiastic, but I still own it. It's still my biggest position. It's about a 50% delta adjusted position. And Groupon lost its CFO 10 days ago for another job, a job that's Cinemark, which is another struggling company, but it's 3 times the market cap of Groupon. She's probably been interviewing for jobs for months because you don't just get that kind of job in a week or two. So let's say she was interviewing for that job, going back to June, April, June, July, or at least looking for a new job. So that doesn't mean it says anything about this quarter, but it does mean that she didn't want to work for Groupon anymore, right? She was not enthusiastic about Groupon's future, or she doesn't believe that the company will need a CFO in the future. Those are the two things. Those are the only two conclusions, unless she moved to Texas for her family. So she either thinks the company wouldn't need a CFO in the future, or she's not enthusiastic about Groupon's future. Interestingly, Groupon named an interim CFO, and the interim CFO only got a 9-month stock deal for $300,000 in stock. Does not say when they're going to price that $300,000, and I'll get to that in a second. And he also got some cash, I think like a $200,000 bonus. Both of them will get paid in August of next year if he's still working at the company. Now, if you go back to when Melissa Thomas was named interim CFO back in August of 2019, she was hired in the middle of August, and then 3 weeks later, they issued an 8K, and they gave her a 4-year stock deal that was worth like, I think $3 million. And they had the stock number of shares and everything. It wasn't dependent on, the next quarter and whatever the mark's going to be based on earnings. I'll get to why I'm mumbling about this in a second. But if there was a change of control, Melissa would have gotten all 4 years of her stock vested, $3 million. If you look when Aaron was named interim CEO in March, he got a 2-year stock deal. And it was a pretty big package. I think it was like 200,000 shares, something like that. And again, change of control, all vests. Now this guy gets a 9-month deal. He's been at Groupon for years, and it's just 300 grand. And they're going to search for a permanent CFO. That said, in the 8K, they did not say anywhere they were going to implement a search for a permanent CFO. In the 8Ks for when Aaron Cooper became CEO and when Melissa Thomas became CFO, there's a line that says the board is going to search for a new CEO and CFO. This 8K, that's completely omitted. Now, the investor relations team did send an email out to investors, that I guess institutional investors, and in that email it says they are going to conduct a search for a permanent CFO, but it was not in the 8K. So where does that leave us with Groupon? Holy shit. They have an interim CEO who's been interim CEO now for 20 months, 18 months, more like 18 months. Okay. Or even 20 months, I guess. It was March. So whatever. Somewhere between 18 and 20 months. They have an interim CFO who has a 9-month stock deal. Okay. They had a crappy quarter last quarter and crappy July, and the supply issues that they have struggled with haven't changed. So I'm sure the third quarter is going to be atrocious. People have, credit card data, and you see where the stock trades. So clearly, people don't expect this to be a good quarter. I have to think that they've never been in as much pressure as they're in now to do some sort of deal. I mean, they have an interim CEO. There's no reason why this guy has not been named CFO yet. I know they're getting pressure from investors to name him CEO or to name a CEO. So it's very easy to just do that, and they have not done that. Okay. The CFO just quit. She's been looking for a new job for months. We don't know why she decided to leave. She either knew there would need to be a CFO, or she just thinks the company's a zero, or she wanted to move to Texas. What remains is a undemanding valuation for a company, assuming the stock is not a zero. It's a $700 million market cap kind of EV, even net out the balance sheet. And, they've been generating, they've been doing 30 to 40 million in EBITDA every quarter during COVID, and generating cash as well on top of that during COVID, during 50% and 55%, 2019 levels. I have no idea if the turnaround is going to be successful. I can understand why people have punted on the stock. I think that the situation here is very different than it was last quarter or any time since I've owned it since last year. Expectations could not be lower. Could the stock go to the teens if they, miss on the quarter and they guide to a lousy quarter four? Of course it could. But when I originally got involved in this last summer, the thesis to me was that the lower it went, the more ripe it would be as an acquisition candidate, either strategically to a Yelp or an Interactive Corp Angie's List or to private equity. There's so much money out there that I think somebody would be willing to take a shot to turn this around behind closed doors, because that's what it needs. It needs a multi-year out of the public kind of situation where they take all of their cash, they don't try to generate any cash, and they use it to try to get the company back to growth. If they could ever get the company back to growth, the thing would quadruple. So, I remain this. I think the best play here is January 23 call spreads, kind of a 35 strike, or even just owning 35 calls January 23 and owning common. Your risk with the January 23 35 calls is we wake up to a sale, it might only get sold for $35 a share or $33 a share, and you'll lose all your money on those calls. So your hedge there would be that you own common with it. But there's not much to be excited about with it. I mean, I can understand when people are selling it. It's very, very frustrating. And, if they named Aaron permanent CEO, the stock would probably go down because, again, it would be just another sign that there's no strategic process and there's no plan. It would be good to know that he's going to be there. Can you imagine if Aaron left and then you're left with a new interim CEO with this 9-month, tenured CFO? It would be a disaster. So we'll see. There's 4 major shareholders. They each own about 5% of the company. And then the founder owns, it's 15% of the company. So you have plenty of people that have their eyes on this and are definitely trying to guide the company in the right direction. Now I remember what I wanted to say. So the new CFO starts on Friday, November 7th, whatever Friday is, November 6th or November 7th. They usually report earnings on Thursday night, and then they do the conference call Friday morning. This is the first time they've ever done earnings on Friday morning, and they tell us the time at 6:30 a.m. Eastern. Thanks a lot, fucking Groupon. I got to wake up at 3:30 in the morning to go watch your shitty fucking earnings release. Read your shitty fucking earnings release. And then the conference calls after. The cynic in me says they're doing this because the old CFO's last day is the Thursday. The new CFO's first day is Friday. And they want to price his options on Friday's close, or his stock on Friday's close. And it's $300,000 worth of stock. We're not talking about millions of dollars or anything. Now, I don't know if that's because they expect it to be good and, they want to price it higher. It's more likely they expect it to be bad and they want to give him a better valuation for his stock. Or they're just doing it because Melissa Thomas's last day is the Thursday. I don't know why she stuck around until earnings. I mean, she's working all the way until earnings day, the day before now. And then the new guy starts the next day to be on the call. So I don't think there's anything to read into about earnings being bad, her leaving. Again, she's been working on looking for a new job for months. And she's staying. She's staying for like weeks to transition. I do expect earnings to be bad. I think the key to the story for earnings is what October's doing. And I don't expect October to be really that great. But if October's greater than 60% of 2019, that'll show tremendous stability in the business. And I think the stock will go a lot higher. And 60% doesn't seem like you're asking for too much. If it's somehow between 65 and 70%, the stock would surge higher. But the traffic data on the websites and stuff points to me to think that they're not going to be doing numbers like that. So we'll just see what happens. That's my Groupon. I can understand why nobody would want to own it, but I like the shit and this is shit. So we'll see what happens. I want to talk about PSTH a little bit. PSTH is pretty fascinating because it's been left for dead. And if you look at the last 2-3 months, it's basically traded within a 5-cent range since August. And what that's telling you is that the market thinks there is an extremely low chance of either the Spark being approved or a very low chance of Ackman getting a deal done before it expires at the end of next year. I think next summer or fall is when it expires. The trust has $20 and 0.05 cents in it. So if you redeemed, you would get your $20 back versus the $19.72 it is now, for a yield of about 1.5% gross, but an IRR of higher than 1.5% because it's not a year until the trust redeems. A lot of brokers, like Interactive Brokers, let you borrow money at pretty low rates, especially if you have over $100,000 in borrowings. And you could borrow for as low as 75 basis points, 0.75%. And PSTH is fully marginable. So you could borrow up to 5 times leverage for PSTH, and there is no downside. You get your $20 back in 10 months. Now, in the case of an extreme market volatility like COVID or something, it might go down. It might go to 1910 or 19 or 1925 as people rush for exits for liquidity. But it's extraordinarily unlikely it would ever go below 19, even if the market went down 50%, because people would rush in because it's a cash alternative and the money is completely safe in the banks. So I just only mentioned that because you never know what could happen when you need money, at the most important times. But it's extremely unlikely it would go below 1960 under any scenario. But you should prepare for it to possibly go down a lot. The market fell 50% or something. So why do I like it? I like it because I'm borrowing at 0.75% to make 1.5%. Okay, that's not that interesting, of course. But I could make it big, and I have. It's like a 40% position now for me. And if I ever need margin or capital, I can sell it. It's extremely liquid, and I can take it off. And I don't think I'll lose any money on it because I think it'll be somewhere around here within a few pennies. I don't plan on taking it off, but I know that it's very liquid and it's easy to take off. What are my 2 upside possibilities here? And I think both of them have a decent chance of happening. The first is the Spark, and we should know by the end of December if the Spark gets approved. I'm skeptical the Spark will get approved, but I'm not paying anything for it. So if it gets approved, this goes much higher. It goes much higher because Ackman's going to return all the $20 to us, and you get this Spark that costs you nothing. And the Spark will be publicly traded. Can't be a negative value. So you have to figure out what you think a Spark will trade at. And I think it will trade at least at 50 cents and as much as $2, but probably somewhere between 50 cents and $1. So if you add the 30 cents, you're going to get to the 20 and another 50 cents, you'll make 80 cents from 1970 which is a phenomenal return for a few months with no risk and extremely low borrowing costs. If that doesn't happen, then the stock won't go down. It'll stay where it is or within a dime of this. And you'll hold to see if Ackman can get a deal done between now and the end of next year. And I think with his reputation online and everything that's happened with this name, there's a better chance than the market's willing to pay that not only does he get a deal done, but the market likes his deal. And this goes up. And it can go up a lot. And you're not paying anything for it. In the past, when people own Pershing, they're paying 25, 24, 28, all this risk. And now you're buying it below trust. So I think it's an incredible opportunity. And that's why I made it a 40% position. What else do I want to talk about here? What else did I say? Let me see here. Amplify, it's smaller for me now. It's a 7% position. I have absolutely no idea what's going to happen with the lawsuits and what kind of insurance they have and all the myriad of questions that are going on there. It's a complete black box. If you own that, you're just taking a pretty big gamble on a lot of unknowns. So, I have 7% of my portfolio in it, which is the same amount I had before this happened. But I could see why people would be scared there and would punt if they did. I can't remember what else I want to talk about. What did I say here? Let me go pull this up. I don't even. Yeah, I followed CCXI. Thanks. Thoughts on odds of the spark happening? Well, if you read the feedback, which I did not do, only 3 of like the 100 responses were negative. The rest were all positive. Daniel, Sheep of Wall Street, has convinced me that it shouldn't happen because if they approve this, the SEC approves this, can you imagine how dangerous it would be for every Tom, Dick, and Harry issuing a spark? And how many, 100 sparks could be trading on the New York Stock Exchange that don't cost anybody any money. And it just seems like it could be ripe for fraud, right? You could have the Trump MAGA SPAC spin out a spark to MAGA, mania. And then that spark's worth $20, $30, $50. Trump could come out with a spark, So I just don't see a spark being approved. I don't think you need to be approved. And in some ways, a spark not being approved would be better for PSTH because then Ackman is left with just PSTH. Oh, that's the other thing that I wanted to mention that the market's completely diminishing the odds on. If there's no spark, I could see Ackman doing a rights offering for PSTH2 when PSTH expires. And you get, PSTH and you get a warrant. And I think that rights offering would have value. So I don't think he's going to go out of the SPAC business forever just because Spark's not approved. And I think the market's completely ignoring that value too. So yeah, I like it. I like it a lot. I can't for the life of me remember what else I was supposed to talk about besides AMPY, Groupon, and MagnaChip in my portfolio. Oh, Pershing and AXSM. I think I talked about everything. That was quick. What did you? Somebody asked me a question here. I remember in one of your recent videos, you were bullish on Europe reopening for Groupon. How are you feeling about that currently? COVID cases haven't gone down as much as I thought. So Europe's all upside here. It's only like a third of their business. And I still think if you look at the open table data in Europe, that it's pretty positive. And I think that Germany and the UK should do well this quarter. But is it going to be as good as pre-COVID? No. But it should help. It should help. Any other questions? Doesn't have to be long. Those are my thoughts. In conclusion, I have no idea. And also, I think I talked about in the last YouTube, but MIC macro infrastructure worked perfectly. So I'm out of that. You can hold it for the rest of the few pennies, but that trade was over. The MagnaChip is fascinating to me. It really is. I think that if you didn't have a deal, a pending deal right now, that it would have went up 15% on those earnings. Everybody is nervous that Samsung's going to pull their business. And it just seems ridiculous to me. If the Chinese deal doesn't go through, they'll remain a Korean company. And even in the rumors that they were pulling their business, they were only pulling some of their low-end business. And you know, it's so cheap. So I think we'll look back at MagnaChip at 1860, and yeah. All right, I'm logging off. Next time I see you guys, to be with the new MacBook. Take care. Hope everyone's well. Bye.